Hey guys, Nicole here with Momentum Accounting. In this video, I'm going to be walking you through how to read a statement of cash flows. So if you've moved to accrual-based accounting from cash-based accounting, there's always a bit of an adjustment period because you're used to looking at your P&L on a cash basis. And so now you're looking on an accrual basis, and then you're like, well, what about my cash, right? So accrual basis is great for understanding your margins, building the foundation for being able to do forecasts. It gives you a lot of information on managing your business, but it doesn't tell you it doesn't show you the ebbs and flows of your cash. And so what you need to start doing now is looking at your statement of cash flows. And this is a report that you can get out of your account report that you can get out of your accounting system. If you're on QuickBooks Online and you're looking at this report, it's broken into three sections, right? So the first section is operating activities. And if you look at the report, there's going to be a lot of noise in there. What I like to do is consolidate all of those. I don't need to see all the detail. I just want to see one line item that says, here's your cash inflow or outflow from operating activities. So think of operating activities as the cash activity that happens on your profit and loss statement. So it's all the deposits that come in from customers, all the payments that are going out to your vendors, and then payroll. So all the things that would normally show up on your P&L, but on a cash basis. So that's operating activities. Then we get into financing activities. So financing activities are things that are happening on your balance sheet. And this is typically fixed asset purchases. So because when you buy a fixed asset, right, you're using that asset over a period of time. So you're using it sort of like you're investing in it's an investment in future, whatever use or revenue. And so that shows up in that section because it's a balance sheet adjustment. So then the last part is going to be financing, and that's the third section on your cash flow statement. So financing is going to be either, let's say you pulled out a loan, right? That wouldn't be on your P&L, so that's going to hit your balance sheet. That's why it's in the financing section. So let's say you get a loan, you get a deposit for $200,000 in your bank account. It's going to go in that line item there. Same thing on the reverse side. If you're making loan payments, it'll show up in this section. Again, that's hitting a balance sheet account, not a P&L account. That's why it's in that section. However, so the principal portion will show up there, but the interest portion will show up in operating activities because it's on your P&L. So it'll have already shown up. So that's why you might say, well, my payment's $10,000 a month. Well, how come only 5,000 of it are showing up here? Well, part of it's an interest expense, part of it's in principal. The other thing that will be in financing is any equity transactions. So if you're taking out distributions, you can see how much cash you're taking out, or it'll show up there, right? Or if you're contributing money, or if you get investor money, it's showing up there. So I like to think of it like, okay, operations, bucket one, operating activities. This is everything that happens from normal operations. The other things are after all of that happens. Okay, after I have a profit, I'm going to take out a distribution. I'm going to make a loan payment. But that's not necessarily hitting your P&L. Or I'm going to go out and buy a fixed asset, which may not be happening all the time, but it's a one-off. And so that gives you an idea on a month-to-month basis, the trends that happen in your business from a cash flow perspective. Now, if you really want to get intimate with your cash flow, then I suggest setting up a 2-week cash flow forecast where you have your accountant or bookkeeper every day putting in every day, or you're basically forecasting out 2 weeks the money that's expected to come in and go out, and then you'll also see the history of your trends. So that's a really intimate way of starting to understand the ebbs and flows of cash flow on a daily basis in your business. And again, it's a little extra work, but as your business grows, it's something you might want to think about doing. And then if you're really tight on cash, or you're making decisions on where to invest capital, you'll start doing like a 13 or 14 week cash flow forecast, and then you could also do a longer term cash flow forecast. It kind of just depends on what the needs are and your expansion plans for the business. So yes, again, if you move to accrual, it's a little more complicated, but as your business matures, you're going to need to be able to manage your business based on margins and benchmark data, which your P&L will start to show you on an accrual basis, and then look at your cash flow statement and do cash flow forecasting to manage your cash. So you're able to do both of those things. I'm Nikole. I'm the founder of Momentum Accounting. We are a fractional accounting department for small businesses with a focus on increasing profitability and cash flow. If you want to learn more about us, you can go to momentumaccounting.com, and I'll see you at the next video.